welcome to this session in which we will discuss strategic planning. Strategic planning is related to strategic management. In strategic management, we set the objectives and the mission or missions for the whole company, the company as a whole. Now what we need to do, we need to plan to execute those objectives and missions, those overall objectives and mission. So planning is essential for management to do what? To set goals, because we need to set goals, we need to plan, and decide on actions. Now we are going to plan, take action to reach those goals. And in doing so, we assign needed resources for the appropriate people. So really, if you want to summarize strategic planning, it's going to define what needs to be done, because what do we need to do to achieve our objectives and goals, how it will be done, when will it be done, where it will occur, and who will be responsible for each action. We are planning, so we are assigning work to different people, and the whole purpose is to reach our objective. This is strategic planning. So think of it as a roadmap, guiding an organization's activities and enabling managers to direct effort toward reaching the desired outcome, whatever that goal is, based on our objective and mission for the company overall that was set up in the strategic management. So now you are planning to do the work. So in this session, we look at the planning, why planning is important, what are the steps in planning, different planning terms and terminology that you need to be familiar with. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello everyone. Are you struggling with your CMA exam preparation? Do you feel that your review course is moving too fast, too brief, or not covering topics in depth? Well, if that's the case, at Farhat Lectures, we can help you. We build your confidence through in-depth explanation, not memorization or reading the slides. What we will do is we provide baby steps approach to break down complex topic so you can truly learn, understand the material. How do we do so? We offer video lectures, we offer practice MCQs, we offer true-false questions, we offer exercises, we offer the notes. Understanding the material is the first step in passing the exam. Once you understand the material, you have gained the confidence to pass, and you can pass with Farhat Lectures. What can you do now? Start your free trial. You have a 2-day free trial. Take a look at it. Give us a chance. Your risk is zero. You like it, you keep it. You don't like, you cancel. Give us a chance. We can help you pass the CMA exam.
So why planning is important? Well, successful planning aligns an organization with its objectives. We have objectives and we need to get to those objectives. Then we need to make sure that all members work cohesively together toward a common goal. Why? Because everyone in the company needs a task, and that task should reach the target, the mission, the objectives, the goals for the company. So before we perform any managerial function like organizing, staffing, directing, or controlling, those are the managerial function, what we have to do, planning must be established to create the necessary structures and objectives for these functions to support. So first we need to know, what do we need to do? Plan it, then we execute it, then we hire people, tell them what to do, assign roles for them. So that's why planning is important. So there's a process, there's a planning process. The planning process in management defines an organization's long-term directions, aligns its objective with its missions, and allocate resources effectively. Basically saying the same thing. This is what planning is. Reaching our mission, reaching our objective by allocating resources and directing people into that direction. So strategic planning create a roadmap, basically a plan outlining the organization position and long-term objectives, incorporating high-level budgeting for financial strategy. So strategic planning is long-term, the big picture. The time frame for strategic planning generally ranges from 3 to 5 years. Some organization may have longer strategic plans, but those strategic plans change on a regular basis. That's why they don't plan more than 3 to 5 years. Because one thing, it's you're going to increase uncertainty, and as condition changes and evolves, you have to change your strategic planning. Many things could affect your strategic planning: macroeconomic factors, technology, consumer preference, consumer taste. If those changes, then you cannot say, well, this is what I decided to do. This is my strategic planning. Now, there are steps in strategic planning, specific step. The first step is defining objectives. You have to set clear long-term objectives like market expansion or new product development. That's your objective. Then you need to evaluate your strengths and weaknesses. You assess your internal strength, like research and development, your weaknesses. Maybe you don't have a good supply distribution, limited distribution relative to your competitors. Then you assess the risk, identify potential risk like market volatility, regulatory changes, whatever you are doing, whatever product you are trying to develop or market you are trying to reach. Then you would also analyze external factors. What could be external factors? Macroeconomic factors, political factors, social factors, technological factors. Remember the past. Well, as you are planning, you have to take those into account. Then you would use forecasting, and we use forecasting. We learn about forecasting techniques like regression, expected value, time series analysis to project a trend and set goals. Then what we do next is use SWOT analysis to select the best strategic approach and say, how should we go about executing the actual planning? So there are steps in this strategic planning. Now, when we do strategic planning, we want to make sure there is something we call goal congruence. So this is important when it comes to strategic planning. So what is goal congruence? It means everybody in the company is working in the same direction. So ensure that objectives, strategies, and actions align across all levels of the organization, so each part contributes to the overall goal, the overall objective. It harmonizes strategic and operational planning. Operational planning, in contrast to strategic, operational planning is short term, like maybe for 1 year, reducing conflicting priorities and enabling department and employee to work toward a shared goal, a common goal. This is what we want to do. We want to have a strategic plan, 3 to 5 years, and an operational plan. But the operational plan will have to serve the strategic plan, and everyone is aware of them working in the same direction. So planning should motivate all management level from senior executives to frontline managers to support the organization mission. So when goal congruence is achieved, employee decision and action complement each other. I serve the person above me and that person serves the person above them, but we're all serving the objective of the organization. So that objective, for example, for sales, are we planning to grow sales or are we planning to earn more per sale? Are we focusing on profit or are we focusing on growth? If we're focusing on profit, it's totally different. We have to reduce cost, differentiate our product. Maybe the prices will be a little bit higher. That's if we want to focus on profit. If we want to focus on growth, maybe we want to reduce our profit a little bit so we can sell and gain market share. So we have to know as a company, what are we focusing on? Because we don't want top management to be planning for growth and lower level management or middle level management focusing on profit. So what are key characteristics that the company has goal congruence? Key characteristic of that. The first thing is they have a clear goal, clear, and they have to be realistic. Strategic plans should clearly define achievable goals. Exactly what are we trying to do? For example, a goal to increase customer satisfaction could include a measurable targets, KPI, key performance indicator. It's a measurable value to evaluate progress, so 15%. And we use KPIs for many things. To look at our strategic plan, if we need to make any changes, whether we are achieving those KPIs or not. There could be many KPIs like sales revenue could be a KPI, our profit margin, our customer acquisition numbers. Those are KPIs. For example, here's the KPI is raising satisfaction score by 15% within 1 year. So we have a clear goal, raising customer satisfaction. Now what do? We monitor. If they are doing so, everybody is on the same page. Regular progress evaluation help identify areas for improvement, allowing plans to be adjusted and stay aligned with the objectives. And those are key characteristics of goal congruence. Everyone is working in the same direction. We need discipline and commitment from all employees, to ensure adherence. So regular updates and meetings foster accountability. And those are all good characteristics that we are planning properly, and there's a goal congruence. And obviously, just like in anything, we need leadership support. Strong leadership provides vision, motivation, and alignment within the organization priorities, fostering a unified work environment. This is what we're trying to achieve. Everyone working in the same direction, and those are some of the key characteristics that could show you that if those exist, we have a clear goal, we're monitoring the progress, we're getting feedback, the employees are disciplined and committed, and leadership is supporting this process, everyone is working in the same direction. We have something called scenario planning and management. What is scenario planning? Think of scenario planning when we looked at sensitivity or what-if analysis. It involves imagining or thinking about or projecting various plausible future events. Could be many things. Economy could go down. We could have an economic crisis, conditions that could affect the organization, its sales, its growth. So let's take a look at those. They may include economic conditions, political shift, advancement in science and technology, and societal changes. Those are all changes that could happen. What we need to do, create alternative scenarios to do what? To tailor it for each possibility. This could happen. What do we do under those circumstances? That could happen. Well, let's assume the government wants to encourage people to buy electric cars. Well, that's one scenario. Let's assume the government don't care about electric car. Well, that's a different scenario that we have to work with. So we have to look at different scenarios regardless which future unfold, because we have to be ready. So the purpose of scenario planning is not to be surprised, is to prepare for a range of potential situation rather than trying to predict one outcome, because we don't know one outcome. Because one outcome means we have certainty, and remember, we don't have certainty. So it helps the organization stay flexible, anticipate challenges, and make informed decisions that can be quickly adjusted as events unfold. So this is why we have to create different scenarios. What if this happened? What if that happened? And we looked at different scenarios. What we did sensitivity and what if analysis, and we can measure those quantitatively as well. Then we have something called contingency planning. Don't confuse scenario planning with contingency planning. Contingency planning is the process of creating alternative strategies and backup plans to prepare for unforeseen events or disruptions that may impact the organization's operation. Here we're talking about something else. For example, under scenario, we could have a plan A and many types of plan A. Here we're moving from plan A, we have to have a plan B in case plan A and all its scenarios go. Just something unforeseen happen or disruption. For example, a natural disaster could be a disruption. If a natural disaster could affect our whole operation, do we have a contingency plan to move our operation somewhere else? These plans, which often include what's called disaster recovery plans, and we're going to have a whole session about this, and business continuity plans, also we're going to have a whole session about this, are designed to minimize interruption. Here, the whole company is being interrupted. Not your sales is going down because someone created a new technology. This is happening because there was a nuclear explosion in Japan and your supply chain is affected. This is, a major event. Why? To reduce potential losses or damages when unexpected challenges arise. So unexpected challenges is you're going to the extreme of things. So the main purpose of a contingency plan is to make sure essential operation can continue smoothly even during a crisis. Here you're not talking about different scenarios. You're talking about unforeseen crisis, like a terrorist attack, like the 9/11 attack. The New York Stock Exchange had a business continuity plan. They had another building ready and up to go. It's called the hot site to keep on working because the building was affected. So during crisis, they have a backup, a contingency plan. So effective contingency planning enable organization to respond quickly and efficiently to emergencies like a natural disaster, cyber attacks that bring the whole company down, supply chain disruption, think about COVID, or other unplanned event. So remember, in scenario planning, you have planned event or expected event. Here, the event is unplanned. You didn't even plan for it, and it happens. Do you have plan B to deal with it? Something very unusual. And this is contingency planning is so important whether you are studying for your CMA or CPA. We do cover it in we have separate lessons for that. Also, management will have to balance between effectiveness and efficiency because that's the primary responsibility. And we need to know What is efficiency and what's effectiveness? What are those terms? Effectiveness is the extent to which an objective is accomplished. We have to be effective. Effective, for example, if you're studying for the CMA exam, you want to pass. If you pass, you are effective because you achieved your goal. It measures how well an organization reached its intended goals, ensuring that management effort align with strategic priorities. Simply put, doing the right things, achieving the goal, passing the CMA exam. Efficiency, on the other hand, is concerned with making the most with the available resources to maximize output with a given amount of input. What does that mean? Going back to the CMA exam, passing the exam is good. That's the objective. How long it took you? How long? Now, the shorter, the more efficient you are. So if one student studied 200 hours and passed and the other one studied 150, now the 150 is more efficient, although both of them passed. So efficiency is achieving your goal with the least amount of resources, with the least amount of input, while achieving the same output. So efficiency emphasizes cost control, time management, and resource utilization, aiming to accomplish tasks in the most productive way. Here, you're doing things right in a sense that you are using the least amount of resources. So as you're planning, you want to make sure you are effective, you are achieving your goal, and you are efficient using the least amount of resources. So as the organization moves through the planning process, they establish policies, procedures, and rules. What are policies? Policies are general statements and principles. Procedures are more specific. They're like intermediate steps on how to do things, and rules are step-by-step directive. And the reason we have those policies, procedures, and rules, because if we are planning, we want to tell people how to execute the plan, provide a structured way and directing at every level in the organization. So these elements are essential. Why? Because you want to translate intermediate and operational plan into specific actionable guidelines that follow across the organization. Okay, you made the plan. Now show me how to execute. Give me those, what we call standing plans, orders, because they are intended for repetitive situation. And these elements ensure consistency. For example, when we make a purchase, before we make a purchase, we need to get approval. Well, that's a policy. Then the approval is we need the signature of the supervisor in the department. That's a rule, step-by-step directive. But we do this on a daily basis, and we have clarity in daily operation. This is what standing plans are. Policies, procedures, and rules. They help guide employees' behavior toward achieving the organization objective, because we want how to go from A to B to C to D, step by step. So the purpose of these rules, they serve as a feed-forward control. Feed-forward in contrast to feedback. Feedback is after something happened, you get feedback. Feed-forward is basically creating those rules to control the forward process. They help prevent problems before they happen by providing advanced guidance. So the rules, the policies, the procedures, they're advanced guidance, so you perform the steps properly, how to go from step 1 to step 2 to step process and making a purchase and making a sale and acquiring inventory, so on and so forth, how tasks should be performed to achieve objective. So feed forward control proactively addresses potential issues and ensure consistency in how the work is approached, reducing misunderstanding or deviation from what we need to achieve. So that's important. Feed forward control in contrast to feedback. Feedback is we collect after we do things, we collect feedback, whether those feedback that we achieve or not. But feed forward, let's try to give you instruction to achieve the goal before you achieve it. In scenario planning, which of the following steps is crucial to determine which scenario is most likely to unfold? So when we're doing scenario planning, what would help us determine which is the most likely scenario? Is it ignoring external indicators to avoid confusion? So do we say, you know what, we're not going to look at external indicators when we're doing scenario planning because it's going to confuse us? On the contrary, if anything, we have to look at as much information as possible when we are performing scenario planning. So definitely ignoring external indicator is a bad choice. That's easy to eliminate. Setting key performance indicators, KPIs for monitoring trend. Do you want to do that in scenario planning? Absolutely. When you're planning scenarios, you want to look at indicators. For example, macroeconomic indicators, inflation rate, purchasing powers, or maybe internal economic indicators. How's Division 1 sales doing compared to Division 2, or Area 1 to Area 2, Northeast versus the Southwest, so on and so forth. Do you want to do that? Setting key performance indicator for monitoring trend? I would say that will be helpful for scenario planning. Between A and B, I could definitely eliminate A. Waiting until the last moment to make adjustment, that's bad. It means you have no scenario planning. If that's the case, that's the opposite of planning altogether, scenario or non-scenario. Developing only a single plan to reduce complexity. Now, you don't want to develop a single plan, because single plan tells me that you know everything what's going to happen. You have certainty. Now, scenario planning is because we have uncertainty. We have to have more than one plan, and we don't want to reduce we'd like to reduce complexity, but the word is complex. So the correct answer is B, as we predicted. What should you do now? You want to go to Farhat lectures, look at additional MCQs, especially if you're studying for your CMA exam, professional certification, CPA, accounting, finance courses. Invest in yourself. Farhat is always here to help, and stay safe.